Hey there, Mavericks! Are you excited to give your small business a financial boost? The Employee Retention Tax Credit is here to help, and it's retroactive. In this video, we'll show you how to take advantage of this incredible opportunity. From understanding the qualifications to the ins and outs of how it works and the steps for claiming it, we've got all the information you need to get more money in your pocket. But before we begin, make sure you subscribe to our channel and turn on notifications so you never miss a new video. And to learn more about the Employee Retention Tax Credit, click the link below for our full guide with answers to some of the most frequently asked questions. The Employee Retention Credit, or ERC, is a tax credit passed through the CARES Act. It's a way for employers to get some money back to offset employment taxes they've had to pay due to the pandemic. The main goal of this credit is to encourage employers to keep their employees on staff even during tough times. It's a way for the government to help offset employer costs while preserving jobs. So how much is the Employee Retention Tax Credit worth? In 2020, employers could claim 50% of eligible wages up to $10,000 per employee per quarter from March 13th to December 31st. That means a maximum of $5,000 per employee. But the rules changed for 2021. Now employers can claim up to 70% of the first $10,000 of qualified wages paid from January 1st to September 30th, with a maximum of $7,000 per quarter per employee and a total of $21,000 per employee per year. Also, some employers may qualify for wages paid from October 1st, 2021 through December 31st, 2021 if they are classified as a recovery startup business. To qualify, an employer must have at least one employee started on or after February 15, 2020 and have gross annual receipts that are at most $1 million. Can you claim the credit retroactively? Absolutely. To do this, you'll need to fill out a 941X for each quarter you qualify for the credit. Once you've completed the forms, you can send them to the IRS through mail and receive a refund check. So how does the credit work? When claimed on quarterly tax returns, the Employee Retention Credit can lower the employment tax that must be paid. And if the credit amount exceeds what you owe, you can ask the IRS for an advance payment. The good news is that even if you didn't claim it before, you can still file amended returns to get the credit as a refund. So if you're looking to claim the Employee Retention Tax Credit, there are a few things to keep in mind. First, your business must pay qualifying wages to at least one employee, and then your business or organization needs to meet one of these conditions. Either your operations were affected by a government mandate or your business had a big drop in income. For 2020, gross receipts for the quarter must be less than 50% of the gross receipts for the same calendar quarter in 2019. For 2021, gross receipts must show a decline of more than 20% of a comparable quarter in 2019. There are also some rules to remember when claiming employees under the Employee Retention Tax Credit. For 2020, if your business has more than 100 full-time employees, you can only claim the credit for wages paid to the employees that were retained but not working. And for 2021, if your business has more than 500 full-time employees, you can only claim the credit for wages paid to employees that didn't provide services. Just a friendly reminder, most small business owners that meet the requirements will qualify for the ERC tax credit. There are a few exceptions. Businesses that don't qualify include self-employed individuals without employees, federal, state, and local government entities, and public subdivisions. Regarding the Employee Retention Tax Credit, qualified wages are wages subject to the FICA taxes. However, there are some situations where wages may not be counted towards the credit, such as wages paid to relatives, wages used to qualify for a Paycheck Protection Program loan, wages used to qualify for the PPP loan forgiveness, wages for which the employer received a paid sick and family leave credit under the Families First Coronavirus Response Act, and wages paid to an employee for whom the employer received a Work Opportunity Tax Credit. So you're thinking about claiming the Employee Retention Tax Credit. Are you wondering how it'll impact your federal return? Good question. According to the IRS, when an employer receives a tax credit for the qualified wages, including allocable qualified health plan expenses, it doesn't have to include the credit in their gross income for federal income tax purposes. That means neither the portion of the credit that reduces the employer's applicable employment taxes, nor the refundable portion of the credit is considered taxable income. In simpler terms, the credit is not taxable, but it's important to note that certain expense disallowance rules could affect your return after receiving the credit. To get a better understanding of how the ERC will impact your taxes, speak with your accountant or a tax professional. Okay, so you're interested in applying for the Employee Retention Tax Credit and you're wondering how to do it. No worries, I got you. Initially, small business owners could claim the ERC on their quarterly tax return using Form 941, but a lot of them didn't take advantage of it. The good news is that small business owners can still get the credit by amending their quarterly tax returns using the 941X. And if you're eligible, you'll get the refund in the form of a check from the IRS. Now, if you need to know if you qualify for the credit or want to avoid going through the process alone, you can hire a third-party service to help you. They'll do all the work for you, including completing and submitting amended tax returns to the IRS for free. Just a heads up, the deadline for filing your amended returns to get the Employee Retention Tax Credit for the 2020 filing year is April 15, 2024. And if you're looking to claim it for the 2021 filing year, the deadline is April 15, 2025. Getting your refund from the IRS for the Employee Retention Tax Credit can take a while. Some businesses have reported receiving their refund in as little as 4 months, but others have said it's taking them between 10 to 12 months to receive their refund check in the mail. After you've submitted your Form 941X to claim your tax credit, you can always check the status of your refund by contacting the IRS over the phone. In summary, the Employee Retention Tax Credit was only available for 2020 and 2021, but you can still claim it. It's definitely worth checking if you qualify and taking the time to complete and submit the required forms to get that extra money to put back into your business. And if you're feeling overwhelmed by filing an amended return or you're wondering if your business qualifies, feel free to seek help from an accountant or a tax professional. They'll be able to guide you through the process and make sure you get the refund you deserve. For more information about the Employee Retention Tax Credit, click the link below for a comprehensive guide. Thanks for watching, Mavericks. If you like this video, please give it a like to help us spread the word, and we'll see you next time.